All right, hey everyone, welcome to another episode of Trading Bitcoin with your host Tone Vays, coming to you at my usual hangout spot, the airport, and not at the lounge, just hanging out by the gate. I'll have about 20 minutes after that. At the top of the hour, I'm going to join somebody else's spaces to talk about price as well. And then it'll be time to board my flight. And need to travel around for a little bit. Can't stay in one place too long. You guys know that. Even in this COVID ridiculousness. All right, let's go to the charts. See what's going on. I haven't done any streams over the weekend. I took the full weekend off. No streams Saturday, no streams Sunday. Let me zoom the camera out a bit. There we go. And let's see what is going on. Thank you so much for joining the live chat. NFTs. Oh God, NFTs is just JPEGs, but have fun with those. Oh, my trip was good. Oh wait, there you go. I need to turn that audio off. You guys will see. I'll be spending Christmas where I belong, which is Miami. So you will find me there. Anyway, I'll be streaming. I'll be hanging out. I'll be keeping an eye on my Twitter. Might be hanging out with some people. I'll just open it up to everyone. You guys know how I do. Okay, weekly chart. Weekly chart. We have started a full candle below a critical 50-period moving average. If this candle fully remains below the moving average, today is only Monday. Anything can happen. We could rally back above the moving average, but you don't want to spend an entire candle below the moving average. Bitcoin is in a very dangerous area right now. We really needed to avoid this low $40,000 area at all costs. You know, swinging down there for an hour is not a big deal, but hanging out here for a week is a really, really, really big deal. Because if we lose this $40,000 area, we now must find some kind of a bottom around 35K. But you can see that there is absolutely no support whatsoever on a long-term basis in this vicinity. There's also no support anywhere until all the way down in the $20,000 range. At least over here, when we came down to 30,000, at least we have moving average support. The next time we come down to 30,000, there's not even going to be that. So this creates a very dangerous situation. Like, look, we can talk about fundamentals and we can talk about on-chain analysis all we like. But at the end of the day, the price action of Bitcoin is king. And the price action is not wrong. The price action is what it is. You can estimate that the value of a Bitcoin is 55,000, 100,000, $1 billion. It doesn't really matter, right? Like the price decides what it is. I mean, Peter Schiff has estimated the value of a single gold coin is $10,000 his entire life, probably since he was 15 years old. And it doesn't mean that he's been right? Like the price of gold is what the price of gold is. And what is the price of gold? It's doing absolutely nothing at $1,800, okay? So we're not going to argue with the chart. And right now, the weekly chart says be very, very cautious. The 4-day chart is my bread and butter chart for position trading. This chart went into 100% cash position, and a lot of people thought that was crazy. A lot of people thought it was crazy to remove the allocation from a full 100% bullish position. Okay, I'm sure there are people that shorted the market right at the top. That's not what this chart does. This chart tries to give you a better advantage than the average, even dollar cost averager, right? It's an attempt. It doesn't mean it's a successful attempt. But this is potentially a better way to do that. You know, it's a chart that's supposed to have you in Bitcoin when it's rising and out of Bitcoin when it's falling. So as Bitcoin started falling, we started allocating less and less Bitcoin. As Bitcoin will start to rise, we're going to allocate more and more of the portfolio to it. You can see the current candle is the candle after an MRI buy. The danger here is that if we get one more candle to the downside, that creates a very bad situation. But the MRI is not what this chart is about. This chart is about moving averages. It's about Tyler Jenks's Consensio. You can see right there, Consensio. Those that want to learn more about Consensio, you can check out Tone Vays products and services on-demand videos, the old Tyler Jenks Consensio chart. Cyberpunk Steve, thank you so much for your generous super chat. Can you do a TA on market cap instead of price? A TA on market cap. We can take a look at TA on market cap. And if you're interested in my technical analysis workshops, they are right here in products and services, and also the MRI indicator is also in products and services MRI indicator. Don't forget, we have unconfiscatable in Las Vegas, along with an awesome poker tournament. We're still at the early bird price of $400 a ticket, which will rise to $500 as more of these tickets get sold. So go ahead and check that out. Okay, back to the charts. We have another candle below the short-term moving average. You can see the crossover between the intermediate and the long-term moving average. You can see the long-term moving average has completely flattened out, and next candle is going to start declining. This is normally an environment to short the market. We're not going to, you shouldn't short Bitcoin, you shouldn't short any crypto. They're way too volatile and they have way too much upwards trending bias. But Consensio here would call for a potential short position. The reason why I would not short here is because we have already fallen way too much to start shorting. We're already down 30%. That's not where you want to be shorting any asset. The time to short an asset is more like here, when the asset has only fallen maybe 15%. So let me see. So from the latest swing high down to here, it's fallen like 15%. And then it meets the full criteria of being below all three moving averages. They're all declining and they're all crossing each other. Going into a short position after such a big drop is not advisable. But if we consolidate here for a bit, if we rally back to this moving average and then start to turn down, that could potentially create a short possibility. I'm not ready to short this right now or put a short label on it. So we're going to stay in cash. At this point, we're going to stay in cash until we can recapture one of the shorter term moving averages and probably have the short term moving average cross the intermediate term moving average. Okay, it's a very, very dangerous situation that I am happy that I went into a cash position, because now that cash position is clearly the wise decision. The daily chart is looking really bad. For the first time in a long time, we have an entire daily candle sitting below the 200-day moving average. We now have an additional, you can look at these two as almost parallel here. We now have an additional downward trend line that is going to create additional resistance. Now, this 200-day moving average is dropping. Now, if the price of Bitcoin drops far enough, say $44,000, and then tries to rally, if the price of Bitcoin drops down to say 30, below 40 to 44 or lower, it can then have a bit of a pullback to this additional area of resistance. Okay, because now you're going to have the 200-day moving average and the downward sloping trend line. The same exact situation as what's happening up here. I don't know what it means to some, but when I look at the charts, and I see that Bitcoin is not able to make it back to these moving averages, it means that the situation is actually weaker than prior thoughts. So this tells me that Bitcoin is in even worse position than it was before. I pay attention to Willy Woo. I pay attention to Plan B. And I know these guys are still super bullish. And the chart is just not telling me that. It's just not telling me that. I can lie to you guys and I can sit here and say, buy the dip, buy the dip, buy the dip. But the chart is telling me to be very, very, very cautious. All of this looks very, very bad. Can we rally to the upside? Of course we can. And I still believe we're in a bullish cycle. If we zoom out to the monthly area, on a monthly scale, we still have some support. I don't believe we're in a bear market. No, I'm tired. This is a bear market, right? Now, the difference here, the main difference here is that we were so exhausted above all the moving averages, right? You can see how we were at the peak. We were 200% above the short-term monthly moving average. We were on a weekly scale, this would look even probably worse. We were almost 600% above the intermediate, and we were over 1,000% above the long. We're not dealing with these numbers now, okay? We had a worse situation up here, right? When we were at the peak. See, that's 100, not 200. That's 270, not 600. And that's 500, not 1,300. So we were twice as much overextended before. Now, if we do this again, this time, right at the peak, how bad was it? Well, we were only 50% above the short, only 120 above the intermediate, and only 300 above the long. Okay, so that's why this is not an obvious potential start of a bear market. I still think we're in a bull market. To me, the worst case scenario is going to be the 20 period, the $20,000 area, which is like this area here. Now that area here is the long-term moving average, which we never managed to cross, even in the last bear market. But that's the worst case scenario. The more likely scenario is this $35,000 range, which avoids breaking the $30,000 lows. But for now, we're still in this triangle, waiting for a breakout. All right, I covered that GBTC premium is falling off a cliff. It's falling off a cliff. In a way, I'm kind of happy about this because the new year is coming, and those that are able to throw $6,000 into their retirement account can pick up Bitcoin at a discount. At least that's my view on it. I mean, you guys, there's no need to trade GBTC anymore. I wouldn't normally trade GBTC anymore, but because of this premium, I'm happy to capture this premium because when a bull market comes, I fully expect this premium to evaporate. Hey guys, besides Unconfiscatable, we are also organizing the financial summit in the Dominican Republic for traders and hedge funds. Go ahead and join us August 1st to 6th in an incredible resort where we managed to rent out an entire castle. This is oil. Let's see what's going on. Very interesting here on oil. Oil is dropping hard today to start the week. I have been bullish oil, but this completely reverses that. Now, this candle is pretty bearish. You can see how the MRI indicator, which called the perfect top on a weekly scale, is now in line to potentially call the perfect bottom in the very near future. But we are dangerously close to a double bottom, and we are breaking below the prior swing lows. This is a situation where I would go back into cash. if I had been allocating positions into oil to the upside off of this big candle, I would now flip those positions fully into cash. Let's look at the short-term chart on Bitcoin. This is bad. You see how we flirted with breaking this support, but last time we broke it on an MRI buy, and look what happened. It was a buy opportunity, but once again, we hit our head on the moving average resistance. We hit an MRI warning candle, and we dropped down. We are now recovering back to the line and the moving average, and I just don't see what on this chart tells me that we are not likely to make new lows. I don't see it. I'm anticipating new lows, guys. It is what it is. The S&P 500 is puking out a lung, it looks like. I didn't really want to keep this line going. Whatever happened today, I don't know, maybe it's because the White House has wished every unvaccinated person a happy death during their holidays. If you guys saw, just see my Twitter for the White House press release. And that's not good. So I guess people are getting ready for more government shutdowns, and they're going to shut down their business. New York City is putting in some ridiculous regulation that they're going to be voting on, or New York State, I should say, actually. People are talking about a monthly and yearly MRI. Let me see, monthly on the S&P 500. Yeah, so the monthly S&P 500 hit an MRI top last month. So not really surprising if we end up pulling all the way back to 4,300, 1 to 4 candle correction and then more upside. And then one more round. I still think we're going to hit a third consecutive MRI here. Maybe not third consecutive, but there'll be another MRI to the top, to the upside. No, see, the annual one hit the MRI top, and the market seriously sold off big time early in the year, but then it rallied in the second half of the year. And now this year is almost coming to an end. And if next year is an up year, get ready for the extension phase or a second consecutive MRI top. Like, I envision the S&P 500 to repeat what happened in the 80s and 90s and early 90s, right? So I believe the S&P on an annual basis is repeating this. Like, how did we do when we started to break out? When we started to break out, here's the green star candle. That's a green star candle. So here's us breaking out, and we hit a second consecutive top at 500%. Let's see how we do it. 500%, right? So here's the breakout. Here's the green star candle. We're not even close to 500%. Let's go to 500% right there. Boom, 10,000 on the S&P. This is the S&P mimicking what it did in the 80s and 90s. Now, in the 80s and 90s, it was a bit of a technological boom. This time around, I mean, inflation can cause this as well. Inflation, robotics, automation, destruction of all small businesses and everyone using big businesses. Do you guys realize that with the government lockdowns and shutdowns, the mom and pop grocery stores are shut down? Everyone is buying their food online. That helps Amazon. You know, your mom and shop grocery store is not a reflection and is not reflected in the stock market. You know, if Amazon starts to give market share to your local grocery stores, that hurts the stock market, but it helps the middle class. When the government shuts down every single little business and all the businesses now goes to Amazon, Amazon goes up in price. Inflation helps Amazon stock go up in price, and that's how the stock market can reach $10,000 in the S&P, virtually double over the current decade in price. And no one believes why that can happen, but it can easily happen, especially with these lockdowns and forced shutdowns of the economy and businesses. This is why you don't shut down businesses. ever. I mean, unless there's bombs falling out of the sky. And even then, it's like, hey, listen, you want to have your business open, have your business open. But keep in mind, there are airplanes flying over your business that could drop, bombs on it. I mean, it should be up to the individual to decide if they should or should not have their business open, not up to the government. This is the ridiculousness of the situation. We're keeping an eye on Trump's news corporation, and this should not be red. This should be green, because the moment it goes above that line, I think it's a huge, awesome breakout for a potential very nice bullish trade. So we need, is this today? This today. So it almost got there today. So I would say tomorrow, if we break today's high, that's a really good sign. Tesla, we can take a look at Tesla. Let's look at Canaan. Whoa, Canaan is taking a massive hit. Wow. Let's keep an eye on Canaan. A third consecutive MRI buy would be very, very nice. Very nice. Let's look at Tesla. Tesla's looking very bad. I must have been bearish on Tesla because of this blue line, which should really be a red line. I don't know why it's blue. That's an indication that Tesla is in serious trouble. I believe this is more fitting on a weekly scale. Yep. There's your MRI top. There's your breakdown candle. And Tesla is still in trouble. I would rather be short Tesla than long Tesla right now. It's not showing any bullish signs. Now you do have MRI support coming up and an MRI buy in about 3 days. So keep an eye on that. You have a def cross coming up. We are way below the def cross. So I would potentially be, if you were not short Tesla, profiting along the way, I would potentially be looking to buy Tesla off a bounce in the 860 to 70 range.
Hello, and welcome to the Friendly Skies.
No, I'm not the only one sitting around the airport without a mask. So happy to see that.
Make sure we all stay safe together.
I'm not even arbitraging anymore. I'm not even regulatorily arbitraging. I don't even have water next to me or nothing. Screw it.
Inside the terminal and on board the aircraft. Second, wash your hands with soap and water for at least 20 seconds. And third, when possible, stay at least 6 feet or about 2 arms length from others.
That's it, guys. I'm gonna call it a day. Don't forget the Understanding Bitcoin YouTube channel, which has awesome videos from our last conference. Please sign up and join us in person without masks and without health checks of your documents at Unconfiscatable. Though I better check these things with the hotel because they may make you do it. I'm not gonna do it. That's for damn sure. Join us in Las Vegas, March 3rd to 6th, or Dominican Republic. They have no vaccine mandates, no mask mandates, no nothing. Well, actually, maybe the mask. I hope no mask mandates, but no PCR tests to get in, nothing. Just go and enjoy your time. Come join us there. Thank you all for watching. I'm going to call it a day. I have to start boarding soon, and I will see you all on the next one, guys. Tony said something about Bitcoin not being related to the US dollar, but does that mean it's not an inflation hedge? The Bitcoin is an inflation hedge on a longer term scale. The stock market is an inflation hedge on a shorter term scale. So is gold, because gold will react to the price of the dollar. Bitcoin generally does not. The price of the dollar is somewhat irrelevant. Someone asked me to look at the market cap of Bitcoin price analysis. I'll try to do that next time. I'll try to pull up a chart before I start the stream. I don't want to be looking for that chart. All right, guys.